This is Brad Wolff, and this is the end of day Emini review for August the 25th, 2022. Today had a parabolic wedge followed by a deep pullback that led to sideways and trend resumption up. On the open, big bear bar, low probability sell below, probably buyers below. Bulls, they'll buy above bar 2, and if they didn't buy there, others would buy the close of this bar. Strong enough bull bar, 2 consecutive bull bars here. 3 out of the past 4 bars are bull bars closing above their midpoints. Strong enough for at least a second leg up, so buy the close, traders will buy above. This bar followed through, traders will buy, they'll buy the close, they'll buy above. Traders will buy the first pullback for stop entries. If they didn't buy there, they could buy there, or here, or here. Traders buying here run the risk of a possible wedge forming 1, 2, 3. This was probably strong enough that the count got reset to 1, 2, and you may get a second leg. As you can see, it was nested, so the third leg had 3 pushes. First push, pullback, second push, pullback, third push. And that's common where you get a wedge top. You can say 1, 2, 3, or 1, 2, 3, and then you get a smaller nested pattern, 1, 2, 3. Bears would sell below this bar, bulls would exit longs. The reason for that is when you get a parabolic wedge, like we had here, traders will start to look for 10 bars and 2 legs down. You don't know how far the pullback could be. It could be all the way to the open of the day. It could be at these breakout points here, or even the high of bar 2, which is ultimately where the market sold off to, which was right here. So this bar lines up with the high of bar 2. This bar, this low, lines up with basically this high or this high. So always in bears, sell below, bulls exit below. So it's a stop entry. Short, stop up here. Traders will sell below this bar. They'll sell below here. They'll even sell this bar. Doji bar, not as many bears will sell below this bar here. It is a wedge, 1, 2, 3. Best looking bear bar out of the past several bars. Probably profit taking in this area, and it's at support, as I mentioned a few minutes ago. There's support down here. So it's probably more buy the close than it is sell the close down here. Some bears will exit above. However, the reality is micro channel first reversal up will fail, and the market should test back down to this close. The bears that did sell this close never got a chance to get out break even here. So bears would look to sell a pullback. Some would sell below here. This is the first bar, first micro channel bar that triggered. So micro channel here, it triggered here, and then we got a second entry short. So it's a reasonable sell here. It's also a wedge top, 1, 2, 3. Tried to break above the wedge and failed. Bulls bought this outside bar, disappointed with this bar, then the market tried to go outside down here. Bears will sell. They didn't sell here, others will sell here. This is more aggressive since you're already at the target, the close of this bar, this bear bar right here. So some bears will scalp out, anticipating disappointment. Others may keep their stop up here and hold for a second leg. The ones that held for a second leg believed that this channel down was too tight. It's a micro channel, 1, 2, 3, 4, maybe 5 bars, and the first reversal up would fail. Good bull bar at the moving average, but bad follow through, and the bears got their second leg. Now you have a wedge, 1, 2, 3, and a lower low double bottom with this low, and it's a possible higher low major trend reversal, bear trend, trend line break, higher low. And the other 2 points that Al marked up down here are important. It's bar 40. I don't know if this is exactly bar 40, but it's really close. And we may get a possible trend resumption up. We had a trend from the open and then a trading range, which is expected 60% of the time. And the market will usually decide if there's going to be a trend reversal or a trend resumption. Bulls, they would buy here, betting on trend resumption, or at least betting on a test of this higher high here. Started to form a small pullback trend during this rally, but the problem was, as strong as the bulls looked, it was not exceptional. and it's still below these lows over here. So the market formed a wedge, 1, 2, 3, and it started to lose momentum. This micro channel was strong enough that the first reversal down here would probably fail. Bears, they sold this high, scaled in higher. They would use the first pullback to buy back shorts and try and get out, break even at their first entry. The bulls know that, so they're going to buy the first pullback, trying to buy at the breakout point, which is this blue line. You can also call it a bull breakout of the neckline of a double bottom. Double bottom, neckline, the market broke above, and it's trying to retest it here. The bulls got 2 legs up. You can call it 3, 1, pullback 2, pullback 3, and another wedge top. So it's now a double top and a wedge top. Bears will sell, hoping for the break below this neckline and a measured move down to these lows down here and the open of the day. They failed, and the market entered by the close rally into the close. The bears tried to form a parabolic wedge, 1 pullback 2, pullback 3. However, they failed, and the market got an upside breakout and closed near its high. If you enjoyed this video, please go to the brookstradingcourse.com website, where you can find more information and helpful articles, as well as find out more about the trading course. Thank you for watching this video.